All right, inside prediction markets, and we're starting with the 3 big stories in prediction markets this week. Number 1, Underdog sale to IG Group. I've never heard of the holding company before.
Neither have I.
But they sold for, I think it's $1.3 billion if they hit their earnout.
Yeah.
Good for those guys.
Yeah.
A lot of cool guys over there, guys who actually come from fantasy DFS streets. Not sure what happened now. And somebody asked me off this. And, Underdog just launched their DCM prediction market product. If I were betting on myself, I'd kind of like to hit NFL season and watch the volume pop before doing the sale. But also, if you find a buyer who really believes that's about to happen, maybe you don't have to wait that long. Maybe it gets them the capital to do the marketing they need to do now.
I mean, to be fair, it's like, what do they value themselves at? Maybe Underdog value themselves right now at 800 million or 900 million, and they thought if they ripped, they could be worth $1.5 billion. And if they're offering 1.3, well, really good deal. You have to think Underdog value themselves less than that, and you have to think IG Group valued Underdog more than that, and that's why the sale happened. This whole thing, you wait till the volume. Well, the market, do you think the market's stupid? Like the market,
it is. No, the private markets, it's stupid money. At least on this.
Wait, but you said in a previous episode that you trusted the market and you're top down guy.
I would say that they're always charging a risk premium, and internally you can always have a different view on the risk premium. But look, it's one of these things where Underdog probably needed capital to do the kind of marketing push they want to do rolling in NFL season. You can raise to do that, but the sale is another way to do it, especially if you're on an earnout. It's not a super aggro earnout like the one we saw with Optic, but it's an incentive, and we'll see how the product does in the next few months. But good for those guys. Yeah. Story 2,
$36 billion. Lawsuit. New York State sues Kalshi for $36 billion.
You can buy a lot of underdogs with that kind of money. Yeah.
Yes. Obviously,
seeking disgorgement. So for those of you who don't know, disgorgement is the that's like the third rail in any kind of illegal gaming lawsuit. That means not just we want you to stop operating, but you have to pay back anybody who has any losses on your platform. Yeah.
I mean, this is $36 billion is obviously a ridiculous number. They're never getting anywhere close to $36 billion. And let's say for what it is, New York State is scared that they're losing tax revenue. That's simply what this is.
Kalshi says they came to New York with a proposal for some tax plan that is above and beyond what they would owe.
Captain Jack pointed out something that I think it makes sense. That's a poison pill, because if Kalshi wants that, because they might be the only prediction market that can afford those.
Yeah, it ends the negotiation. Yeah.
And it's so why would New York accept that? Because, if they think that they can get what they currently have and they're doing something that they shouldn't be doing, some negotiation is
well, here's why.
Pointless.
Because if you actually push the whole thing to the Supreme Court might just rule no, this isn't gaming, and they don't owe you any taxes beyond what they've already been paying.
Fair.
And you should take it, take the deal, right? Take the buyout. And maybe something like that will happen. Tarek was on CNBC today, kind of invoking the other PMs to be like, hey guys, we all got to be in this together. Yeah. So we'll see what happens there.
I mean, he's right. I mean, we all should be in this together.
And third story, a PM adjacent story, BetBash. I think by the time this goes out, we'll be mid BetBash.
Yeah.
We'll be probably rolling into speed networking, speed dating.
Oh my God.
When you go to BetBash, do you attend all of your speed dates or do you bail?
I don't even know if I'll go this year as well. I mean,
to the speed networking?
I mean, I might, but
you have to go.
Okay. Last year I bailed halfway through. I was just I'm out.
I stick around, and last year my best intro was my very last person.
Really?
They were a trading director at a sportsbook.
Oh, I remember that.
I got an invite to go see the operation, which is really fun, but it is tiring. I do you usually match with some people and I text them and I'm like, let's skip. Yeah, I love you, but I'm gonna go eat a donut.
For me, I feel like BetBash for me is more like there's people that I've like spoken to online or met through like PMs or trading or sports betting or whatever, and just like it's like nice to see them and like say, hey, what's up? And that's all it is for me. But then like there's also like, like what do they have, like the big mixers or like the
open bar
bars,
things.
like you might meet some like new people, like, or some, if for me, for us, I guess it's like also if someone wants a job at Mag and there might be a good fit, now that's a good time to like approach and be like, hey, I'm serious about this, like let's
pause on BetBash stuff for a second, and we will get back into it.
Okay.
And let's talk about Mag, the Manhattan Athletic.
We're wearing,
we got the gear on.
Yeah.
We got our shirts this week.
Looks pretty cringe and coordinated, but it's still good.
We posted the LinkedIn org
last
week,
yes.
So we're kind of doing a not very well managed rollout of the concept, but we now run a business called Manhattan Athletic Group and have for some time. But I think we're
it's been official for like what, 2 months now or a month and a half. I forget when exactly it was.
Yeah, but it's our thing.
Yeah.
This is the culmination of what I've been building for the last 3+ years, and that you joined me on this year, which has been great. We are wholly owned by Novig, and I talked about this with John on his show last week. We have kind of dual mandates in terms of trading performance, but also supporting the platform. But we're one of those dreaded affiliate market makers, the much misunderstood affiliate market makers. Let's get into that too. But yeah, we're a team of 20-something guys right now, quants, traders, engineers, operations, cover a lot of stuff. High touch with customers, high touch with venues.
I feel bad for Jeff. We've got one guy in operations basically.
He's interviewing more people.
Yeah.
And I think it's a really exciting time to be doing what we're doing, and I think we're really good at it, and we do a lot of original stuff that nobody else does. Any initial comments?
Yeah, the one thing I would want to say is I get this a lot, people will be, oh, can you, like, this Novig misgraded this, and they'll tag me on Twitter or they'll DM me or stuff like that. I can't help you anymore. Like that. It is pretty serious. Like there's a firewall with that. Like I have no influence on. I can refer you to the same people that I would go to if I had a problem where there was a misgrade or something like that. Or like if you want to market make, I can refer you to can we dox some Caleb? I can refer you to Caleb, and I can refer you to
the dev relations.
Yeah, the team.
That's the big one. People keep reaching out to me saying I want to get on the API, and it's like I'm kind of It doesn't matter that I know you want to do that, but like the pipeline is set up for you to work with the actual exchange and to be able to protect your privacy if you'd like to.
In a weird way, it's like you're our competition. Like I don't like like we're competing with these other market makers. Like I don't know if I want to help, I mean, I do, but like at the same time,
we want to get everybody on board. Yeah. But you have the right to, go through proper channels and all that. So yeah, we'll probably get a lot of that at BetBash, and we have the team from the exchange as well.
I can't wait. 3 months from now, there's going to be like some void that was like misunderstood, and I'm going to get angry DMs from, brother, I can't help you.
Yeah, we probably lost more than anybody on it. Yeah. If it's affecting market makers, it's affecting everybody. Why don't you reflect a little bit on your time here and how things have gone and where we're at now? What feelings come up for you?
I mean, it was fun when I it's been a fun ride. When I joined, I don't know what I was expecting, but I really like it a lot. Like initially I thought I might be doing some more coding stuff. Then Henry kind of shit all over me. Basically tell me how bad my code is.
But people where they're strongest.
Right.
Yeah.
And now I'm doing more like trading thing, which is definitely what I prefer. And it's the betterment of everything. I did code some slop recently, just, with Claude and whatnot, which is nice to see. But anything like serious, I'm just doing trading. But it's really fun to like really just trade all the time. That's what I was doing for, basically 4 years. And I get to do it every day. Managing people now, it's also fun. I mean, my previous business before, I was managing other traders too. So everything's been a pretty smooth transition for me. I'm really excited, and also love, if it's not been obvious, or I know you said it in John's podcast, but we're trading cross-platform. I mean, we're trading in Kalshi now. We have been for a week or so. Done a ton of volume already there. We're doing even more on Novig. We hope to be adding to polymarket soon, and we're ready ripping. And what I love about it is trading cross-platform allows for like easier hedging, and like risk management is better. You can get better prices overall on things, and it's just really fun to do it. I love the team. Everyone's really bought in, which I appreciate.
Yeah. Novig has switched to RFQ parlays too, which are much more challenging to write and a big experience. The whole intensity level here, I feel like, has jumped up in order of magnitude.
I think what people like don't realize with RFQ is how scary it is. Like, I mean, we've been running it, both on Kalshi and Novig for like a week or two now, and it's like I can't tell you the number of times in which you look away for 5 minutes, you come back and you're like, fuck, and it's like, well, you got to do this, or then we got to update some parameters, and like we're not winning flow, we got to be more competitive, or we're winning too much flow. It's really fun adjusting all the dials. This is what I love doing. I love like trading and just really like getting in the weeds, and like you're just trying to like win it by as minimal as you need to make as much. That's what I really love to do.
It's really nice because we've built a lot of stuff on the pricing side that thus far is just manifested as like straight plays.
Yep.
But now all of a sudden it's like, oh, we can finally really price complex instruments in a way that nobody else is doing. And the beautiful thing about prediction markets is like you can leverage that, right? Like we've talked in the past about, you build a great SGP model and it's like, oh, what it shows me is that all SGPs are a huge ripoff. Not a lot I can do with that, right?
Yeah.
But when you use it to sell, all of a sudden, like the opportunities multiply and it becomes really interesting.
Well, shout out. I do enjoy our relationship. I think it's been good. It's kind of what I expected. I have all these ideas. You shit on majority of the ideas. And explain.
I'm a filter. I'm a filter for the best stuff.
And then, every once in a while, like, just like 2 days ago, I suggested something in Slack and you're like, wow, interesting. And I was, well, there we go. We got one through. We got one through.
I think we've shipped a ton of, I enjoy our relationship too. I don't know what I was expecting. I was expecting how it is like right now.
Yes.
And I also knew it would take so long.
That's the frustrating thing is like, I feel like it was the first 4 to 5 months were kind of tough and slightly annoying, but now like this is where I like I'm in a very happy spot.
And the hard part, to be specific, is we rebuilt all the architecture from the ground up, right? That was part of the split, right? Nothing can be inherited from an old org where we shared any kind of information, data, technology with the exchange itself. So it's all brand new and it's all built to be a lot more performant to handle the scale we're at. And so there's just a lot of like, we can't have new features until you've built this plumbing, and that can take a long time to do. Let's get back into BetBash.
Yeah.
So we're both going. I agree. I love talking to people, like friends that I only see there, that I know from online. I also, though, every year it does feel more and more high stakes for me, the business requirements of what we have to do. The timing doing early August is supposed to be like one of the deadest betting times of the year. But what it actually feels like for me is I'm weeks away from NFL system and I have to put all these pieces in place. And I feel the pressure of that. And I actually feel like I'm going to explode when I'm out in the desert. Do you get that?
Not really. I mean, you said, I understand where you're coming from and I definitely see the truth in it, but I don't know. I'm excited. Like, I love going. It's only the second time, but I loved it last year. It's great.
Yeah. I also find the stakes of poker that I'm expected to play every year go up and up and up.
You're ready for the 5100 at the?
I think it's running 100.
Oh, right.
Yeah, they don't want to mess with the 50 chips. Yeah, I just wired a bunch of cash to the win, so we'll see.
Well, I wish you bad luck because I'll be playing with you too.
Yeah. Thanks. Really appreciate that. Yeah, let's, guys, it's supposed to be fun. We can chill on the limits on these private games a little bit.
Well, the problem is, as you get more successful, you need like bigger and bigger stakes to feel like that.
To make a point. I've booked so many meetings. So I had to cancel going to all of our friends' presentations during the day because it's like, I'm going to write this meeting. And I got to the point where I was trying to set a meeting yesterday. And I was like, okay, this is the only block of time I have. I have nothing scheduled then. And I look back an hour later, I'm like, oh fuck, that's when we're doing the podcast. That's why I don't have anything then. So I gotta cancel that.
Well, that's
but like I'm this close to just not going to our own podcast.
It's crazy because it's like I've like added you to 2 things. You've added me to a bunch of things. It's like the first Tuesday and Wednesday, like I don't know when I'm gonna. It's just gonna be straight.
Yeah,
Like
it's rough. It's really rough.
Thursday kind of calms down a little bit, but it's gonna be crazy overall.
You have to leave Thursday empty because you're following up on everything that you've done the
True,
first day.
true.
So that's what actually happens. And especially if you meet new people and it's like, okay, let's find some time.
Yeah.
Yeah. Where are we staying?
At the Golden Gate.
Okay, that's right. That's right.
Shout out to Jeff Benson. Well, doing Grandissimo, so that's what helped.
Yes, we're both doing a Grandissimo entry. That'll be really fun.
I wish you bad luck with that.
Casual 100K ticket on Survivor. But you usually hit it, right? Isn't it like really easy to win Survivor?
Well, I mean, I'm 2 for 3.
You win it basically every year, right? Yeah.
I mean, I've done Circus Survivor 3 years in a row, 2 wins. I mean, I'm
like taking candy from a baby at this point.
exactly. Definitely won't talk about run good because it's all skill. It's all skill.
All skill. If somebody's going to BetBash for the first time, and especially if they're more coming from the prediction market side of things, what advice would you give them?
Make quick decisions in terms like when
Treat it like live trading.
No. In regards to, there's going to be a lot of people. In my opinion, you should know within 5 minutes if this person is someone you think you can work with. Don't get stuck on a conversation with someone that you're not going to work with. Like if it's your first time and you're here to find partners, get accounts and stuff like that, and you're talking to them and in 5 minutes you're like, this guy's either stupid or you don't like mesh well. Like say you're both originators looking for movers. No point in talking with another originator. You don't need each other. Move on. Just like be aggressive and bowing out from these conversations because there's tons of people there. Filter. One of my friends there, he said like I think he took like 20 meetings and like 19 were complete dust, and the last meeting made him like mid 6 figures and like expected to earn. It's like that's what it's all about. Is like you just want to hit one of them. It's shots on goal. Get as many as you possibly can, and then that's going to be your best chance for success, in my opinion.
Yeah, I would say make sure you know your elevator pitch.
Yes,
about yourself.
yes, that's
and not necessarily that you're just selling yourself all the time, but people are trying to keep track of this stuff, and you should be able to very clearly communicate. Like, yes, I can write code. Yes, I make numbers on whatever, or I do this, right? Like people need to be able to quickly say, oh, this person was this thing. This is what I would save them as in my phone. Be able to explain what your purpose is.
I think a good quote from my friend Kirk Evans is he's this is a great quote. He says he's never met an originator who doesn't get CLV and never met a mover who can't get down size without moving the market.
Yeah,
which is pretty true. It's like be realistic. Like if I hear another like, oh, I built a model that wins, back tested this, and we always get CLV. It's like, wow, really? Like everyone's done that. Like, what have you actually bet? Like, what have you actually like proven to yourself? Like, prove it. Like, show me like tangibly. Like, what I don't want to hear that. What I'd rather see is we just bet X dollars last year and returned this on these books. We want to scale up because of X, Y. That's a good pitch. Saying that, oh, I have a model that's great, or I can get down infinite size is like, yeah, everyone says that.
Yeah.
But what have you actually done?
Anybody that you're looking forward to meeting that you can say out loud or talking to? We already met.
The legend Thomas Stevens.
Is he going?
He is going. I'm excited. He said last year he saw me, but then never went up to me, and like because he texted me like a month or two after. I was like, what the fuck? I didn't even know he was there, and now.
Did our mutual friend who we had dinner with the other night talk him into it? I think we had another buddy who kind of.
Yes. Well, yes.
See, that's why you take these meetings.
Yes.
Because these things, they percolate.
Yeah.
My first year, I did the NFL preview with Judah. He'll be there. Always good to see Judah. Rip.
He's doing with Pej Seth.
He's doing another NFL.
Yeah. Yes.
Oh, that'll be great.
An actual ball knower, not like you.
Yeah. And Rob Pizzola was there. left halfway through.
Wow.
Thought he
Classic.
really was bored by the whole thing. But then he texted me, and we didn't know each other, like a week or two later, asking if I want to do circles off. And so, ball starts rolling. Not that it's like, who knows? But those are the kind of things that you just started one step at a time, start doing. Another person that I'm excited to hear is going is Andrew Courtney, who's been on this show.
Oh, yes.
And who really is not in sports betting at all, SIG trader, but was doing a presentation on trading, which I think will be really cool, right? To have him coming at it really from his perspective. I think we had a great conversation with him. I'm sure he'll have a good time kind of being thrown into the thick of it with all those nuggets.
It is fun. Shout out, we got a trader here that's former Jane Street and Citadel. It is so fun to see his like reaction to like learning sports stuff. Like that's like, whoa, this flies in sports, or like you do this in sport. And I was like, yep. And it's very, and always fun to see like clearly like a very smart ball knower trader move that doesn't know sports, move into sports and be like, whoa, this is interesting.
You forget how much you become attached to these very specific details of things. And we've got Pads as our guest, which will be awesome.
Yes.
I actually re-listened to him on Risk Takers today.
It was good
to kind of refresh my memory. He dropped a lot of gems in that episode.
What was your favorite gem?
I'm trying to think. I mean, he went through a lot of burned edges, which I feel like oftentimes going through burned edges is still giving away edges, right? Like things like Dan Camp, like anticipating spots where Dan Campbell will go for 2 that no model has that baked in. Like that's definitely still happening this year, right? There's always new coaches that have their own decision-making processes around, do you try to take 45 seconds to go the length of the field at the end of the first half, or do you just...
I'll give a little preseason alpha for some people.
Okay.
I don't know if the books still do it. If they do it, I'm giving a free edge away. There is a lot of the preseason NFL models just plug in their NFL models, and you get spots where it's like team is up by 8 with 2 minutes left and the other team is driving, and they'll only be like minus 1,200. How can they lose? There's no overtime. Even if they score it and they...
Oh, you're talking about preseason?
Yeah, preseason.
Yeah, preseason's hilarious.
Yeah, and it's like, you can just like, the whole market's wrong because you're like, what's happened? And the problem is, one of these sharp books has pulled in their NFL model. Everyone's copied off of them. And it's like...
Well, and on a flip of that sometimes, right, is like they'll price in the chance that they get stopped in field goal range and kick a field goal.
Yeah.
And the game is like, why would you attempt a field goal? Like, it's preseason.
Right.
Like, they're just going to throw a bomb. Maybe, like, but you can kind of get the vibe watching how they're calling the offense. Like they're trying the 2-minute drill. And they're just going to run all the plays.
The classic is, do you remember, was it last
By the way, it's crazy anybody writes live action on preseason.
You do a ton.
And there's great limits on it.
I know.
We're going to do it.
Of course.
Yeah, but we'll have live traders on.
I mean, it's like, do you remember, like, was it last year or the year before, Shanny just, like, their team was down and just needed out with 2 minutes to go.
The opposite. Right.
Like,
they're just like,
hell
I do not care. It's time to go home. Nobody wants to play this game anymore. Yeah, preseason's great. Everything about the NFL is spectacular.
Yeah, but just to shout out, like, Pads, I think locking at Pads is what I've realized is, like, I'm sure he's well aware of that. And he's aware of a lot of things that he probably won't say to us or anyone. And
but I think even listening to people talk about burned edges, you can often kind of infer where the frontier is. You know what I mean? So it's like, if somebody says, oh, it used to be they wouldn't pay attention to a pitcher's pitch count, you could kind of ballpark when a reliever was coming in and be ahead of the game on something like that, right? And then you start thinking, okay, but like, are there other, if that's the one he's willing to talk about, what are other pitcher rotation category plays that he's not talking about? Because it's probably just the next most sophisticated detail of MLB pitching.
I mean, like, you could just guess. It's just like, if you assume models just take like an average closer, like team, like rating or whatever, and you have a team, I don't know much about baseball, but even one team where like they have literally the best closer in the league and they have like a mediocre closer. Well, like you can bet on them in spots where he comes in and bet spots where the other guy comes in, and et cetera, et cetera.
Yeah. I want to go back to one other thing we talked about during, sometimes it's like, oh, what are we even going to talk about for stories? And this week it's like, God, there are like a lot of big stories. I don't even know if we addressed this actually. So maybe the first time we're talking about it. The CFTC has a new proposed rule. This is our cut story. Limiting what market makers owned by exchanges can do on the platform, which would be us, by the way.
Yeah, I know.
And the headline rule proposal is that they should not be directionally trading. So that means they shouldn't be taking a stance saying, I like the Jets this week, and we're actively buying the Jets. And I haven't dug into the real nitty-gritty details of how they expect to implement this, and I expect there's not a ton of clarity around it. This rule's been proposed. I believe there's a 60-day comment period that we're in the middle of.
I saw some comments from Alex Kane.
Yeah, let's hear what Alex has to say.
No. Well, okay, so
Alex Kane, CEO of
very, very smart guy
of Sport Trade.
He said, he tweeted, ownership threshold solves these. He responds to Jacob, obviously Novig CEO. And he says, ownership threshold solves the exact problem of this. He was arguing that Alex Kane was in favor of this, arguing that ownership of an exchange should be capped at 20%.
Okay.
The true lurking.
So you're saying an exchange should only own up to 20% of an affiliated market maker.
The true lurking problem under the surface here is the out one pocket but the other affiliated market maker agreements or arrangements rather. Consider how we could make Sports Trade DCM effectively a single dealer venue if we wanted to. Step 1, own 100% of affiliated market maker. Step 2, charge all market makers a 5% commission. Every market maker leaves. None could possibly make a business at that rate. The only one is the Sports Trade market maker. Sports Trade market maker holds 4% on every trade, but pays 5% to the DCM, losing 1%. Sports Trade parent just funds the losses of Sports Trade market maker with the gains of the DCM. No money really changes hands at the parent level. Even at a less egregious commission rate, the fact remains true. Whatever the 100% owned affiliate market maker is paying isn't really being incurred at all within the reference frame of the parent holding co, and uses as a wedge to gain material partial advantage on the venue. It's precisely why the SEC doesn't allow this practice, because it would hurt price discovery and market efficiency.
Okay.
So wait, I have a response to this. I didn't want to post this publicly on Twitter because people are just going to think I'm pumping my own bags, which is fair.
We're also putting together like a measured response.
And we can cut this if you don't want it. And I said, don't want to publicly comment as people won't listen to what I have to say and assume I'm pumping my bags. But I think what you might be missing is, while your example is true, the same can be accomplished by having so much competition or good rec flow, or both the exchange can charge enormous fees and effectively drive all market makers to effectively break even. This is what's kind of happening to Kalshi. Their fees are so high and they look to increase RFQ fees too because they can, as they have both lots of competition and tons of recreational flow. The goal of an exchange, like any business, is to maximize profits, which means maximizing fees, with some respect to volume, but as we both know in sports, the rec customer is extremely price insensitive. In my opinion, having an internal market maker only matters if you are the best or one of the best, as other market makers can undercut and do the job better. One last point. In your example, there would be no point for internal trading to trade at a loss, as if they are going to lose money and you view the exchange for internal market maker as one entity, they're going to get 5% from a different market maker booking that trade. So it's actually in their best interest to not book at a loss and book at a break even, but they can have expenses, etc., like salaries, bonuses to traders and whatnot. So if another market maker can do better, it's in the exchange benefits. And I think that's what a lot of people are missing.
There's a lot of pieces to this.
Yes.
So I want to start with a directional thing. I think it is a very bad and misguided idea to say, well, let's try to regulate what kind of trades an internal market maker can or can't make. You need to either
Why?
You got to allow the practice or not. Well, first of all, it's like impossible to categorize, right? So let's say it's Mexico hosting England in Mexico City, and 90% of retail purchasing is on Mexico. Is that the internal market maker directionally choosing England? I mean, what happens if you have a day before that match, you say, hey, I expect that we're going to have a ton of risk on Mexico, So we're buying a bunch of Mexico today to de-risk, and then it doesn't actually happen. And all that happened was you took this huge directional trade on Mexico, right? And what happens if every time you consider making a trade for risk purposes, you go, oh God, is the regulator going to call this directional trading and fine me?
It's funny you mentioned that because that's a good example, because we had this conversation.
Yeah, these are real things that just happen.
We discussed buying like the obvious rec side a day or two in advance.
Totally.
And then
for the purpose of being
Right,
delta neutral,
and-
trying to achieve what they
and
wanted
then
to do.
USA Belgium, so that Mexico game, England game happened, and then USA Belgium, the rec flow never came. Like it never came. So it was like, whoa.
Or it was evenly split across.
Yeah, and it was like, whoa, that's crazy.
Yeah. So you have to leave it to the traders and the market makers themselves to construct their own portfolios. And you're not benefiting anybody by introducing a lack of clarity to them around what they can and
So
can't do.
what about the other point? Because I used to think what he thought as well. And of course, like people are going to say,
So let's try and make in very plain English terms. Right now, the venues have enough flexibility that if they choose to, they can toy with fees and structures of their plans to make it prohibitively difficult for more than a few affiliated market makers, including the ones they own, to trade at scale.
Mhm.
That's I think the most
which is fair,
honest, depoliticized
which
way
is
to put it.
fair criticism.
It's certainly a thing they can do.
Yeah.
So I would say, first of all, the markets are markets, right? Like, I would make the case that it's totally fine to allow exchanges to try that. If it actually has material impact on pricing and liquidity and uptime for customers, then the product will be materially worse and they will lose customers. Or if they don't lose customers, then that doesn't matter to customers, right? Like, you can let the free market decide on this. That is totally fine.
Now, okay, what I'd push back there is if you get to like a spot where like it's like this, the reason why monopolies are bad is the free customers might still use the product because they have no other option, and it's like
But there isn't a monopoly in this.
I'm saying no, of
Yeah.
course right now, but I'm saying is like if in 5 years there was a monopoly or duopoly and this happened, would that be a problem?
Sure. I mean, I'm making the case that it's actually not as horrible as you might think. Like, for instance, we had a bunch of sports books that were all single dealer for years, and people enjoy sports books. Those are very successful products or successful businesses. We think we can do better with exchanges. And I personally am of the opinion that the more open the exchanges are, the better it is for everybody.
Of course.
But I it's not necessarily the job of a regulator to try and put their thumb on every single scale. It's great, especially in a new emerging industry, to sometimes sit out and observe what do customers desire, right? Like, it's possible that customers want product experiences that it is only possible for exchanges to deliver when they are single or limited broker. Maybe, like, and customer behavior is often very different from what a vocal minority of high information people say they want. And we just haven't had the time to actually see it. So I think it is always worth it to kind of let customers get to experience new product categories for themselves and see what they really desire before getting all moralistic about it. Now, that being said, I certainly understand the case and probably lean in favor of a policy regime that calls for more fair and equal treatment of all market participants.
Of course, that's the best for everyone.
And I, from what I've seen from the proposal, that the rule doesn't really look like that to me. And I think there's this danger where if everybody agrees that, or a lot of people agree that we ought to do this, and then the regulator proposes something different, but people are kind of against the groups that are be impacted, that you just don't listen when you're like, hey, this is a bad rule, because it's like, screw you, and it doesn't look like the rules that would actually solve this problem to me personally. Another thing I would point out is a fair set of rules will still have qualifiers in it. Like, you know, if you want to have uncapped rate limits and all these incentives, right, you need to be doing certain levels of volume, and you need to be doing things that are really difficult to do or really toxic and really in the service of the customer rather than your P&L. And ultimately, your small garage band market makers are not staffed or equipped to do a lot of those things and will come up short on them. And so there's a degree to which like fair rules might look an awful lot like unfair rules, because it's like, well, nobody can achieve this except for a handful of market makers. It's like, yeah, they're spending millions of dollars on salaries. They hired 25 people. Like they have incredibly expensive data subscriptions. That's what it actually costs to deliver this customer experience. And so you might advocate for all these policies and find that you've just reinvented where the free market would land anyway and absence them, because you didn't actually have this supply of what you're pretending you have. You know what I mean? Yeah. So I think we'll put all of that into text and see if we can sway the CFTC at all about all of it.
I mean, it's if it is, well, I just have to adapt. It is what it is.
Yeah, we'll figure something out.
The thing that I would just end on is, I get the criticism, because I used to think, you know, the exchange would do that. But what I would just really strongly urge people to think about is, if another market maker came to like Novig and is like, we can do everything that MAG does, but, you know, for cheaper, they would rather just like cut us out and like stop paying our salaries and just have that market maker support the platform. It's not like they only want us to like, they don't really care if we succeed or as long as someone succeeds. I mean, they care that we succeed, and it guarantees one person, but if someone else does a better job, they're just going to go with that person.
I mean, I think the summary is market principles solve basically all of this stuff, more or less.
Yes.
And if they don't, then maybe you've misconstrued whether or not there really is a problem.
Yeah.
Here's a question you should not answer on air, but I'll ask you anyway.
Oh boy.
Let's say every single DCM that had an affiliated market maker all got together and said, okay, the rule is we have to own less than 50% of our market makers. So there's not this like too tightly coupled symbiosis. So everybody needs to, why don't we all sell off a piece to one another? So each of us owns 30% or whatever of every other market maker. Which groups would you be willing to swap a piece with, and which would you say,
I'm not answering.
I'm good.
I'm not answering that on air.
Yeah, no, that's correct. But it's a funny.
But we know exactly what groups we would want.
Well, no, there's some that are an open question to me.
The problem, look, in all seriousness, like as much as I like, the problem is there's like 2 or 3 groups that I would be like, yep, I'll swap, but they wouldn't want to swap with us. And there's a bunch of groups.
Really? Hoop that's affiliated with the DCM?
Oh, no, an affiliate with the DCM? No. Sorry, I was thinking any trading group in general.
So SIG wouldn't fall under this for Rothera.
Oh, right? Okay. I was thinking
it would not. Which is again like my understanding is that well, I don't.
See, the funny thing is like,
book. But yeah, like what is even
I have confidence that
does it cover, like I think when people think about who is affected by this and which groups, it doesn't actually map to what the letter of the law does.
Sorry, Jan, I was initially thinking that it was every group, but you said only affiliated. So yeah. I feel confidence that I wouldn't want to swap with anyone, but that's just me.
I think there are a few groups I'd be open to swapping with. Maybe not one for one, but
well, that's what I meant. Like,
these are the kind of conversations we might be having this week at BetBash. So. Fair.